Welcome to the deep dive. I always find it fascinating to take a peek behind the curtain of companies we sort of interact with every day, even if their names don't immediately ring a bell.
Yeah, it's like understanding the engine in your car without being a mechanic, right?
Exactly. So today we're plunging into ASML, holding ticker symbol
Right.
ASMLQQQ.
Yeah, ASML. Now, they operate in what sounds like a pretty technical area semiconductor equipment. But honestly, don't let the jargon scare you off.
Uh-huh.
This company is absolutely fundamentally key to, well, everything tech these days. Think of them as the sort of unsung heroes behind the chips, the ones powering your phone, your computer, even the most advanced AI stuff.
Okay, so our mission here is pretty simple then. Let's try and make ASML understandable, maybe even a bit exciting. We want to figure out what they actually do, what makes them such a big deal in their field.
Yeah, look at their strengths, their financials too.
Right, check the financial health and maybe explore any potential speed bumps ahead. We're using a recent analyst report as our guide for this.
Sounds good.
So yeah, get ready to have your tech understanding dialed up a notch. Let's kick off with the big question. What exactly does ASML do that's so crucial for, all these gadgets we rely on?
Okay, so at its core, ASML builds these incredibly sophisticated, incredibly complex machines. Machines used to actually make semiconductor chips.
Pick the chips themselves?
Well, they make the machines that make the chips.
Sure.
It involves a process called photolithography. Imagine like a super advanced form of printing.
Okay.
You're shining a very precise beam of light through a kind of stencil, it's called a photomask, onto a silicon wafer.
Uh-huh.
And that light basically etches microscopic circuit patterns onto the wafer. You repeat this layer upon layer to build up the chip's incredibly complex circuitry.
Wow.
And the goal is always smaller, more intricate patterns. That's what makes our devices more powerful, more energy efficient.
Right. Smaller means faster, generally.
Exactly. And the fascinating thing here, what really stands out, is that ASML isn't just, one of the companies doing this. They are the dominant force.
Okay, so they're like the architects, drawing these unbelievably tiny blueprints for all our tech. And you said dominant. The report mentioned something like a 90% market share in these photolithography machines.
Yeah, that's right, about 90%.
That's not just significant, that's practically a monopoly. What does that kind of market share even mean for the industry?
Well, it absolutely shapes everything. Let's call it a near monopoly, unless ASML essentially set the pace.
Yeah.
They decide how fast chip technology advances, in a way. Now, this has driven incredible progress, obviously, pushing the boundaries of what's possible. But, it does make you wonder, could a lack of intense competition eventually slow things down? Maybe.
That's an interesting point, a potential downside to being too dominant.
Potentially, yeah.
Yeah.
But for now, ASML is firmly in the driver's seat. They've got two main product lines. There's DUV, deep ultraviolet lithography. That's been the industry workhorse for years, really reliable.
Mm.
But then, for the really cutting-edge stuff, the chips powering the AI revolution, the latest smartphones, supercomputers, you need their other key product, EUV, extreme ultraviolet lithography.
EUV, that's the newer, more advanced one.
Exactly. And here's the kicker. ASML is currently the only company that can produce these EUV machines at the scale needed by the industry.
Wow, seriously, only them. So if you want to make the absolute top tier chips.
You have to go to ASML.
Yeah.
There's no real alternative right now for EUV at scale. It gives them huge leverage.
Incredible leverage. And get this, the report says their machines can print patterns up to 30,000 times thinner than a human hair.
Yeah.
I mean, just try to wrap your head around that level of precision. It's mind-boggling, makes you appreciate the engineering involved.
It really does. And unsurprisingly, their client list is basically a who's who of the semiconductor giants.
Yeah.
You've got TSMC, Samsung, Intel. They're the main customer.
The big three.
The ones actually making the chips that end up in, well, everything.
Yeah.
So ASML is this critical, often kind of invisible link in that whole global tech supply chain.
Okay, so undisputed champs of this unbelievably precise printing. Sounds like a rock-solid position. The report brings up this term, economic moat. Can you break that down? What is it, and why does ASML supposedly have a wide one? Sounds like a castle or something.
Now, that's actually a perfect analogy. Yeah, an economic moat is basically a company's ability to maintain its competitive advantages, to protect its long-term profits from competitors chipping away at them.
Right. Keeps the competition out.
Exactly. And a wide moat, that just means these advantages are considered particularly strong and durable. Morningstar, the analyst firm here, they typically look for advantages lasting, say, 20 years or more for a wide moat rating. And ASML, they've got several layers to their moat, several strong defenses.
All right, let's dig into these defenses. First up is intangible assets. What kind of secret knowledge or special sauce does ASML have there?
This really comes down to decades of accumulated knowledge, internal know-how, stuff that isn't just written down in a manual, plus these very long-term, very deep collaborations they have.
Like with partners.
Yeah, their partnership with Carl Zeiss, the optics specialist, that's absolutely crucial for the precision their machines achieve. But it goes way beyond just patents or blueprints.
Yeah.
There's a great quote from one of their tech leads, basically saying, look, you could put 10,000 brilliant engineers in a room, give them all the technical drawings, and the machines still wouldn't work.
Really? Why not?
Because some critical knowledge just isn't documented. It's tacit knowledge,
Yeah.
built up over years of experience, trial and error, refinement. It's incredibly hard for anyone else to just replicate that from scratch.
That's fascinating. Like trying to bake your grandma's cake just from the recipe.
Exactly. You'll miss something.
You miss the feel, the intuition. Okay, next moat layer. Switching costs. This sounds like it would be a massive pain for ASML's customers to even think about using someone else's tech.
Oh, it's a huge factor, a massive headache, as you said. Look, these ASML machines, especially the EUV ones, are unbelievably complex beasts. An EUV machine might take, 12 to 18 months just to assemble? Then weeks to install. They're enormous, weigh hundreds of tons.
Wow.
And they get deeply integrated into the customer's semiconductor factory, their fab. These machines are often the main bottleneck in the whole chip production line. Any significant downtime costs these fabs millions of dollars per day.
Okay.
So imagine trying to switch to a competitor's EUV machine, assuming a viable one even existed. You'd probably have to redesign the entire fab. It's a colossal, incredibly expensive, and super risky undertaking. You're not just swapping out a printer. You're re-architecting the whole factory floor.
Okay, so it's not just inconvenient, it's fundamentally baked into their whole operation and incredibly costly to change. Got it. Next moat element.
Cost advantage.
Yeah.
This seems tied to their R&D spending, which sounds, frankly, staggering.
It really is. We're talking over 4 billion euros annually, and that's focused solely on lithography.
4 billion euros a year just on making this light printing tech better. Yep. And that spending just dwarfs their main competitors like Canon or Nikon. They have lithography divisions, sure, but they're much smaller. And those companies have much broader business interests overall.
Right, they do other things. Cameras, printers.
Exactly. ASML is all in on lithography. This lets them continuously push the limits of what's possible, making chips smaller, faster, better. It's kind of a virtuous cycle, isn't it?
How so?
Well, their dominant market position generates huge profits. Those profits let them reinvest massively in R&D. That massive R&D strengthens their tech lead, which reinforces their market dominance, generates more profits.
And makes it incredibly hard for anyone else to even think about catching up. Yeah, I see that cycle.
Precisely.
Okay, and the final piece of the moat mentioned is a recurring revenue model. Sounds almost like a subscription service for making chips.
Yeah, that's a good way to think about it. These machines, they last a long time, often decades. But they need constant servicing, crucial upgrades, software updates. And that generates a significant and, importantly, quite predictable stream of income for ASML. It's not just about the big initial sale.
Right.
Interestingly, the report highlights that even their older DUV machines, they generate about 130% of their original purchase price in service revenue over their whole lifespan.
Wow. More than the machine cost itself.
Exactly. And for the newer, more complex EUV machines, they expect that figure to be even higher, maybe around 150% or more. Plus, customer retention is incredibly high. Once a fab is built around ASML tech and processes,
They're kind of locked in.
pretty much, they're very, very likely to stay an ASML customer for the long haul. So yeah, it's tough for customers to switch, and ASML has this reliable engine of ongoing revenue.
And I guess that predictable income helps them keep investing billions in R&D too, right? Reinforces the whole thing.
Absolutely. It lets them plan and invest for the long term with confidence, knowing that base level of revenue is likely to be there.
So let's recap the castle analogy. You've got these super high walls built from unique knowledge.
The intangible assets, yeah.
A really deep, expensive moat to cross because of switching costs. A powerful innovation engine inside, fueled by massive R&D spending.
It's a cost advantage.
And this steady stream of supplies, the recurring revenue, constantly reinforcing the defenses, that really does paint a picture of a formidable economic moat.
Okay, let's shift gears a bit. What about the money side, the financials? How's ASML looking from a valuation perspective according to this report?
Right, so the numbers. As of mid-April 2025, the stock price was hovering around $683 per share. But the analyst report we're looking at puts its intrinsic fair value estimate quite a bit higher at $960 per share.
$960. That's quite a gap.
It is. That gives you a price to fair value ratio of about 0.71, which, according to this specific analysis, suggests the stock might actually be significantly undervalued right now.
But undervalued is always an interesting word for investors.
Yeah.
But hang on, the report also mentioned a recent dip, a 6% drop on April 16th. What was that about? Yeah, that dip was largely down to new orders in the first quarter of 2025, coming in a bit lower than the market expected, about EUR 3.9 billion.
Okay.
In the current economic climate, investors can be pretty sensitive to any signs of slowing orders, especially for big-ticket items like these machines.
Sure, nerves get frayed easily.
Exactly. But the analyst here really emphasizes, look, you shouldn't draw major long-term conclusions from just one quarter's order numbers in this industry. It can be very lumpy.
Lumpy, meaning irregular.
Yeah, because of the sheer scale and cost of these machines and the long lead times involved, orders don't come in a nice smooth stream. They come in big chunks, often unpredictably. So one down quarter doesn't necessarily mean a long-term trend.
That makes sense. These aren't exactly impulse buys. What about their overall revenue forecasts? Did they stick to their guns for 2025?
They did. ASML reaffirmed its guidance for the full year 2025. They're expecting revenue somewhere between EUR 30 billion and EUR 35 billion.
Okay.
Interestingly, the analyst whose report we're using is actually even a bit more optimistic. Their models project EUR 33 billion for 2025, and then another jump to EUR 37 billion in 2026.
37 billion. Wow. What do they need to do to hit that?
Well, to hit that 2026 number, the analyst estimates ASML needs to average around EUR 6 billion in new system orders per quarter over the next 3 quarters, which they believe is achievable given the underlying demand drivers we can talk about.
Okay. And profitability. The report mentioned price-to-earnings ratios, PE ratios. What do those tell us?
Right, the PE ratios mentioned are about 24 times their estimated 2025 earnings, and then dropping to 19 times for 2026 earnings as profits grow.
Is that high, low, average?
Well, the analyst points out that these levels are actually pretty much in line with where ASML's PE ratio was during previous periods of significant macro uncertainty, like back in October 2022 or March 2020.
Ah, okay. So compared to other uncertain times, it's not at a whack.
Exactly, which leads the analyst to suggest that the current valuation, even with that recent dip, could represent an attractive entry point for investors who are thinking long-term.
An opportunity, perhaps?
Perhaps. They also project pretty healthy growth going forward, low double-digit annual revenue growth over the next decade. And they expect profit margins, the EBIT margins, to keep expanding as ASML ramps up production of those high-end EUV systems.
Okay, so the picture seems pretty rosy financially, potentially undervalued even, but the report also gave it a high Morningstar uncertainty rating, so it can't be all smooth sailing, right? What are the main clouds on ASML's horizon, even with that amazing moat?
You're absolutely right. No company is without risks, and that high uncertainty rating reflects some significant ones. One big one is customer concentration.
Ah, relying too much on just a few big buyers.
Exactly. ASML gets a huge chunk of its revenue from a relatively small number of very large customers, mainly TSMC, Samsung, and Intel.
The big three again.
Yep. If any one of those giants were to suddenly, significantly slash their spending plans, maybe due to an economic downturn or a strategic shift, it would definitely hit ASML's results.
Makes sense. What else?
Another major uncertainty is geopolitical risk, specifically the ongoing trade tensions between the U.S. and China. That's a big one.
How does that impact ASML directly? They're Dutch, right? Not American or Chinese.
They are Dutch, yes.
Yeah.
But U.S. regulations can and currently do restrict ASML's ability to export its most advanced technology, particularly the EUV machines, to China.
Ah, okay. So U.S. policy directly impacts their sales reach.
Correct. And that's a risk factor that's largely outside of ASML's own control. It depends on government decisions in Washington and Beijing.
Yeah, that U.S.-China dynamic casts a long shadow over so much in tech. Any other potential disruptions to watch out for?
Well, just the inherent cyclicality of the semiconductor industry itself. It tends to go through booms and busts, or at least slowdowns.
Yeah.
During economic downturns, chip makers often get cautious. They might postpone buying expensive new gear like ASML's machines, even if they know they'll need it eventually.
Delaying big investments until things look clearer.
Exactly. Now, it's worth noting, the report also gives ASML an exemplary ESG risk rating, meaning low environmental, social, and governance risks, which is good. But those bigger uncertainties around the economy and geopolitics are seen as the more prominent risks right now. It's just a reminder, isn't it? Even the most dominant players aren't totally immune to what's happening in the wider world.
Very true. Okay, so we've got the incredible strengths, the moat, but also these significant uncertainties and risks. Looking forward then, what are the key things expected to actually fuel ASML's growth in the coming years? What's the engine pushing them forward?
Number one, without a doubt, is artificial intelligence, AI.
The AI revolution we keep hearing about.
Absolutely. The demand for ever more powerful, more specialized chips to handle AI calculations is just exploding. And ASML's key customers, like TSMC and SK Hynix, are seriously ramping up their investments to build the factories needed to produce these advanced AI chips. ASML's EUV machines are essential for that.
So AI demand directly drives demand for ASML's top tech.
Directly and significantly.
Yep.
Now, beyond AI, you also have the potential recovery of more traditional semiconductor markets, things like smartphones, PCs, the automotive sector.
Right, those have been a bit sluggish, maybe.
Yeah, the recovery there might be pushed out a bit, maybe more into 2026, depending on how global GDP growth goes. But the overarching long-term trend is clear. More electronics, more sophisticated chips, in everything.
Electrification of cars, smart everything.
Exactly. That underlying trend is incredibly strong for the whole semiconductor industry, and therefore for ASML, because they enable all that progress. They specifically expect really strong, sustained growth in spending on their EUV technology, not just for the logic chips and processors, but also for advanced memory, like DRAM.
Okay, so it sounds like they're positioned perfectly to ride some really powerful long-term tech waves, especially AI. One last thing the report mentioned was an exemplary Morningstar capital allocation rating. What does that actually tell us? How good are they at managing their money and making strategic moves?
Yeah, getting an exemplary rating there is a big deal. It's basically Morningstar giving a strong vote of confidence in ASML's management team.
Saying they handle their finances well.
Extremely well. It means Morningstar believes ASML has done an exceptional job investing its money, its capital, in ways that strengthen the company's competitive advantages, that wide moat we talked about, and also effectively reward shareholders.
How do they do that?
Through smart, strategic, long-term investments. Think about their acquisition of Cymer back in the day that was crucial for developing the EUV light source technology, or buying Hermes Microvision, which is important for checking the quality of the chips being made.
So strategic purchases to bolster their core business.
Precisely. Plus, they maintain a very healthy balance sheet. They're not over-leveraged. And they have a consistent approach to returning cash to shareholders through both dividends and share buyback programs. It suggests they're not just tech wizards, they're also financially disciplined and shareholder-focused.
Okay, so putting it all together then, it sounds like ASML is this truly dominant company in an absolutely critical industry. They've got these significant, long-lasting advantages, that wide moat protecting their business.
Very much so.
They seem exceptionally well placed to benefit from huge long-term trends, especially AI. But there are definitely risks, macroeconomic slowdowns, those geopolitical tensions.
Yep, those uncertainties are real.
But based on this analysis, at least, the current valuation might offer an interesting entry point for investors who are thinking long-term.
That's a fair summary, I think.
Yeah.
Look, this deep dive, hopefully it's given you a solid foundation for understanding ASML, what makes it tick, and why it's so important in the tech world.
Yeah, definitely demystified it quite a bit.
Good. But as always, we really encourage you, the listener, do your own homework, dig deeper, read more about the semiconductor industry itself, maybe look into Moore's Law and whether it's still relevant. Understand the physics of photolithography if you're really keen.
Maybe not the physics, but understanding its role is key.
Right. Just really appreciate how central this process is to driving technology forward.
Okay, and on that note, maybe a final thought to leave everyone with. Just consider how one single company, mostly unknown to the average person on the street, can be so absolutely pivotal to how the entire global technology ecosystem functions. And really, to shaping the future of innovation itself. It kind of makes you wonder, doesn't it? What other invisible companies out there hold similar sway over our world?
That's a great question to ponder.
Definitely something to think about.
Yeah.
Thanks for taking this deep dive with us.